Okay, so welcome you all to this event today. I'm really delighted to have you as an audience here today and also to have three great experts with me. My name is Jonas Groß. I'm currently a PhD candidate at the University of Bayreuth, and in my dissertation, I'm analyzing central bank digital currencies, which is exactly the topic we discussed today. Before I talk about where we are heading this event and also introduce our speakers and panelists, I would like to just take a few seconds to discuss or to talk about the initiative and the meetup group who's hosting this event. And this is the Blockchain and Crypto Meetup Group Bayreuth, which is basically a group of students, but also PhD candidates who are basically very eager to learn a lot about distributed ledgers. So we started this meetup in 2017. And are basically since then hosting events about cryptocurrencies, about blockchain in general, and also about CBDCs. So we currently basically had about 20 events hosted until now, and we basically have like a team consisting of 10 different people working on this project. And if you want to learn more about this initiative, what you can do, you can also follow us on Facebook, Instagram. We also now have our own YouTube channel. So if you want to check out what we are normally doing, we have all our events recorded in this semester, so you can basically watch them. They are available on YouTube, also as this event today will be. And you can also contact us via email in case you have any questions. Right, so we are today talking about CBDC in practice, and this is an event which should really be also quite interactive. So if you personally have any question you would like to ask the people and the experts and maybe also myself, you're very, very, we really ask you to do this. So what you can do is we use a Slido tool today. So you can go to slide.do. And then you are asked to insert an event code. And this is today 95444. You can do this, but you can also alternatively just scan the QR code here, which might be easier. And then you basically come to an interface where you directly can ask questions. What you can also do besides asking questions, you can upvote questions. So if you think or consider some questions very relevant, you can upvote them. And in the end, we will also have a Q&A and we will address the questions which basically have the most upvotes, so to be basically very democratic here. Before we start, we will also want to thank basically the parties supporting this event, which is first Troutman and Partner provide the Zoom license today. So thanks here for doing this again and being such a great partner. And besides that, also thanks to the Digital Euro Association. The Digital Euro Association is a think tank you might know, and is an initiative just launched a few months ago. And this is basically aiming to increase education, so to basically provide insights into digital currencies. So also something we are doing today. And we also want to build a community of experts and network and foster collaborations in the field of digital money. And this is basically where this event fits perfectly today, because I'm personally a member of the Digital Euro Association, but so are my great panelists today. So Simon Chantry, also Peter Dittus and Evgeni Mitkov, they also are part of the Digital Euro Association. So I'm really happy to have them today as guests. Right, so this is basically it about the introduction. We have today a three-part agenda. So first we will have an introduction of the panelists, and also I really asked the panelists to explain how their work is related to CBDC, and also very briefly what CBDC project they are also currently working on, because it's really today about CBDCs in practice. And afterwards, we discuss the CBDC projects they are working on and outline implications for the European Central Bank. And in the end, we basically have a Q&A session. Right, so before we go into the discussion, just one comment. Today we are talking about central bank digital currencies. So for today, we use the definition that this is basically a digital currency issued by a central bank. So it's from the perspective of the holder, a claim on the central bank, and it's available to the general public. So today we talk about retail CBDCs and not wholesale CBDCs, just to make this clear. And now I'm really happy to welcome first Simon Chantry. Simon is working for BIT, a company that is collaborating with the Eastern Caribbean Central Bank on a CBDC project. Then we have Peter Dittus, who is working closely working together with some parties in the Marshall Islands to introduce a digital currency there, and is basically working for SFB Technologies and has been working for the Bank for International Settlements just a few years ago. And last but not least, we have Evgeni Mitkov, who is working for MTech, and they are also developing collaborating with the central bank in the Bahamas to with regard to their CBDC, the so-called sand dollar. So yeah, I'm really thrilled to have you three here as panelists. And what I would do now, I would start with Simon, then Peter, and then Evgeni, so that you guys can basically just very briefly introduce yourself, say how your work relates to CBDC, and very briefly explain like your CBDC project, so the project where you are currently working on, before we start with the discussion. So I would like to hand over to you, Simon.
Thank you, Jonas, and thanks to everyone for being with us today. So yeah, my name is Simon Chantry. I'm co-founder and CIO of BIT, and so BIT, we got into digitizing currencies actually back in 2015. We were working on digitizing the Barbados dollar first, and so we launched the digital Barbados dollar in 2016, early 2016, with the support of the central bank and the Ministry of Finance. Now, that wasn't an official CBDC. That was more of a synthetic CBDC. They gave us a blessing to roll out the network and the applications, and we keep 100% reserve. So that was sort of the first, I guess you could call it, proof of concept of our digital currency management system software solution. Fast forward to 2019, and in early 2019, February, we signed a contract with the Eastern Caribbean Central Bank to digitize their dollar, the Eastern Caribbean dollar, which they're now referring to as DCash. So that contract, we've been working on that for almost 2 years now. And what that involves is basically the full stack, if you can imagine it from the perspective of different transacting stakeholders in the economy. So we've built the tools for the central bank, we provide the tools for the central bank itself to securely mint, issue, distribute, redeem, and destroy digital EC dollars. We've built applications for the financial institutions to interact with their central bank, to interact with their clients, both enterprise and retail clients. And then, of course, we have merchant solution and mobile wallet solution. Now, I should stress that for the purposes of the pilot, it will be, fully BIT's software, sort of end to end. And yet, when the solution goes live, it will be opened up to competition. So other mobile wallets, other payments applications will be able to integrate into the network to provide a payment services or payment solutions to the general public and a variety of stakeholders. But for the purposes of the pilot project itself, it's BIT's entire digital currency management system. Now, you had asked for some of the goals, the nature of the project. The Eastern Caribbean Currency Union is a fairly unique environment, one of the oldest monetary unions in the world, actually. And a fun fact regarding the ECB, they actually studied the Eastern Caribbean Currency Union prior to rolling out the euro to see how a common currency could function across multiple territories. Now, obviously, the Eastern Caribbean Currency Union is, I think, 2 orders of magnitude smaller, roughly, with a collective population of maybe 800,000. But nonetheless, it's been a very stable and well-functioning monetary union for quite a few decades. So it was studied by the ECB. Just a fun fact there. For the pilot project, there will be 4 islands of the 8 in the Eastern Caribbean Currency Union participating. The goals, as stated by the ECCB, they vary. Financial inclusion is a big one. So we want to provide powerful digital financial services throughout the region, but we want them to be cost effective. And we want to drastically reduce the cost of the current digital payment services, as well as increase interoperability. I think the payments infrastructure currently in the Eastern Caribbean Currency Union doesn't allow for sort of seamless transfer across institutions and a number of other sort of friction points that in North America most have been taken care of, and certainly in Europe a lot have been taken care of with Target 2 or SEPA. So we're seeking to basically aggregate a lot of the payments functionality to the digital EC or DCash network. Also, they're looking to decrease the usage of checks, sort of just upgrade, sort of move along the evolutionary process of digital payments using the DCash network. Similarly, they want to gain economic insight. So obviously we take privacy very seriously, but there's certainly economic insight to be gained by rolling out a CBDC network. And so anonymized transaction data and the ability to monitor monetary velocity and adjust monetary policy in real time. These are feature sets that will be considered and built out at a later date. But initially, we are mainly looking to focus on providing more secure and cost-effective payments infrastructure for the citizens and the businesses throughout the EC islands. Now, as far as where the project is at, as I mentioned, we engaged the ECCB in early 2019. So we've been building and customizing for them for nearly 2 years. And at this point, the central bank is fully trained up on the software. The financial institutions are training on the software, and so are the merchants. And we're looking to go live with a full retail rollout sort of later this quarter. But certainly it's taken a little longer than expected. As you can imagine, training multiple stakeholders across 4 countries and then also spooling up their merchants and their financial institutions, it's been quite a process. It's certainly a large endeavor. So, but we're very, very thankful to be part of that project and to see our digital currency management system in play. One of the goals that we do have, and feel free to cut me, Jonas. I'm trying to see how much time I have here, but one of the goals of BIT throughout the Caribbean initially was to be able to connect Caribbean currencies with one another for more cost-effective cross-currency exchange. And so that is certainly the goal that we are working towards. And we are also in touch with our friends in Bahamas as far as determining ways that we can integrate cross-currency functionality with digital EC dollars and the sand dollar. But certainly that's our goal more broadly for the Caribbean region, because typically what happens in the Caribbean is if you're going to trade when the islands are seeking to settle exchanges with one another, they have to go through the US dollar and they have to use a correspondent bank in the US. And so, we would really like to see, especially as regional trade picks up, we're really looking to facilitate cross-currency functionality. And that's really best achieved by the integration of national digital currency networks, or what we now know as CBDC, or central bank digital currency networks. So that's another goal more broadly that BIT is heading towards, and certainly working with our clients to do so. Yeah, I guess, Jonas, anything else that you'd like to hear before I move on?
Perfect. I think that's really good for the introduction. I think we will discuss the rest in the panel then. So thanks, Simon. Great. Let's continue with you, Peter. You could also introduce yourself and very briefly explain your project. And sorry, I muted you, so you're currently muted.
Is that better?
Yes, perfect.
Okay, Jonas, well, thank you. Thank you for inviting me to participate in that panel. It's an interesting discussion, and in particular, since we're talking about projects that don't have the future vision, but already sort of are pretty close to implementation. So a few words about myself. I'm not a techno guy. I'm not a blockchain person. I know, of course, a little bit about it, but I'm coming from the economics background. I was a long time at the Bank for International Settlements, the last 10 years as Secretary General. And I left the BIS in 2016 to work on exciting projects like the one I'm right now working on, which is the SOV, that is a digital currency for the Marshall Islands. Now, maybe just to put all the cards on the table, it's not really a CBDC in the strict sense, because the Marshall Islands does not have a central bank. The Marshall Islands is using the US dollar, and it's using the US dollar to a lot of satisfaction, actually. But the Marshall Islands faces two, at least, serious problems. One problem is it's spread over a huge geographical area, many atolls, more than 1,000 islands, and the cash is basically between these islands is transported by boat. And that is quite tricky. And if you have suddenly travel restrictions or no planes are coming in, there are no dollars coming in. The other challenge really is the integration with the world financial system. Simon mentioned this already. Basically, the Marshall Islands is very far removed from the world economy, but it's even farther removed from the world financial system, because their link to the world is really just one correspondent bank. And to put it into perspective, the Marshall Islands has about 60,000 citizens in the Marshall Islands and has about 30,000 citizens who live in the United States. And they need to send money back and forth. And that is done by MoneyGram, for example, or Western Union, together with the correspondent banking relationship overlay that costs typically of the order of 10% for each transaction. And that's a lot. So basically, we have been working with the Marshall Islands to develop an additional currency, so not to replace the US dollar, but additional currency, the sovereign, that basically would help the payment system internally. 4G, for example, internet 4G coverage is very good there, so that is not a problem. But also to help the international transfers between the Marshall Islands and their citizens abroad. But more generally, the idea is that this currency can really be used by anyone. Technically, we have teamed up with Algorand, who is our technology partner, because we think that this is one of the best blockchains currently available for financial transactions. It does not rely on proof of work, which obviously for a country that is threatened by the rising oceans would be really crazy. It has a very fancy and very effective proof of stake mechanism. And what is also quite impressive is that this the number of transactions is very, very fast, very high, and it's very, very scalable. And since we think that the SOF eventually might be used by a lot of people all over the world, that has been a concern from the beginning. Now, where we are right now, we have been pretty advanced with the technical design. We have lined up the investors to help us introduce the SOF, because it costs money to do these things. We have basically, we are ready to go, not to introduce the SOF, but to really get into the implementation phase. But, and this is where I think I should also put the cards on the table, the difficulty has been partly technical to get a project like this going, but I think it has been even more difficult in terms of the political dynamics that you have in a country that is a very close ally with the United States, that is really dependent on international donors' funds. When we started this project a few years ago, really, when official people heard crypto, they said, "Oh my God, this is terrible. They want to help the crooks in this world," and so on. So we had a lot of discussions and interactions with the IMF, with the Treasury in the US, and that has taken really a lot of time. What has also been very important is to design the currency such that the FATF regulations or recommendations, I should say, and the regulations that are expected from financial institutions, know your customer, transactions monitoring, all that is really built in on a technical level. So that is where we are right now. In the meantime, the government has changed in the Marshall Islands. And right now, the new government is basically reviewing the state of the project. They are carrying out due diligence, and they are going to decide within the next couple of months on how to proceed with the project.
Perfect. Thanks, Peter, for the insights into the SOF and also your work. Last but not least, Evgeni, it'd be great if you could introduce yourself and also talk about your CBDC project.
Hi, thank you for being part of this amazing panel. Evgeni Mitkov, CTO of MTech. As a part of the introduction, was involved in blockchain technology and cross-border payments for over 7 years now on the blockchain side, and before that 20 plus years in the currency options space. What I see as a huge opportunity is to effectively merge payments, FX and settlement into a single service, and CBDC does exactly that, and potentially offers the opportunity for a country to be able to unite into a single liquidity pool the transactions that importers, exporters, and FDI or outflows of capital, and be able to match these transactions. And at that point, the central bank's role becomes a lot easier in terms of managing reserves and managing foreign transactions. And particularly becomes even easier when central banks on the other side of the equation also have a CBDC. So the more of these projects that we see around the world, obviously the more amazing opportunities we will start to see develop in terms of really reducing, as Peter pointed out, the 10% on average that, especially for individuals and small businesses, that are paying for cross-border transactions. As a bit of background on MTech, MTech was founded to address the needs of the Central Bank of Bahamas in the cross-border payment space. We were subcontracted to create the MVP for the Bahamas Sand Dollar and connect it to external digital projects and fiat payment rails. And we're intimately involved with the development and deployment of the Sand Dollar. The project of the Sand Dollar came about for very similar reasons, as Peter pointed out. Bahamas is an island nation with 400 islands, where similarly the cash is distributed in boats, and with the added challenge of hurricanes passing by every month or so in the rainy summer season. And one such hurricane 2 years ago wiped out 2 islands. And for the central bank to rebuild financial infrastructure, ATMs, and so forth, and or commercial banks to come back into those islands becomes pretty difficult, especially after a hurricane. And so inclusion was one of the biggest goals of the Sand Dollar as a CBDC. And it is a proper CBDC issued by the central bank and operated by the central bank. It is a retail CBDC. And the only difference that separates it from proper DLT technology is it uses a DLT technology, but it's centralized around the central bank, obviously. So the challenge of addressing these constant hurricanes and potential destruction to infrastructure was, how do you operate when the infrastructure disappears after a hurricane? How do you include people that have lost that infrastructure into the financial system? And how do you distribute cash to such a, again, vast territory? And the sand dollar idea came about with a single requirement of being able to operate offline for predetermined timeframes. So sand dollar can and allow users to be able to spend their digital dollars without the overall connectivity between islands being up, and allows up to 2 nodes of the platform to be down before the transactions get blocked. So it has this offline capability, which gets backed up, and then eventually when connectivity comes back online, allows for the transactions to be reconciliated. The Bahamas obviously very much tied with the US economy. So being able to move between US dollars and Bahamian dollars was a main goal, and be able to do that seamlessly. Similarly, for American tourists coming to Bahamas, then they're paying 7% in ATM fees that when they withdraw cash locally, or payment transactions end up costing 7 to 10% as well. So another challenge that Bahamas had was the ability to attract banking services. A lot of the banks left the island because it's only 330,000 residents, and the remaining banks obviously increased their fees significantly. Also, with the proximity of the US, about 100 kilometers at most north from, or 50, 80 miles from Bahamas, a lot of the tourists come and spend their US dollars. So the Bahamian dollars became somewhat irrelevant for parts of the economy, especially the tourist-oriented one. So the sand dollar, similar to the Marshall Islands, is a way to make the local currency relevant and used again. So we are inclusion is a main goal, being able to operate offline. And being able to connect to mainland, to other Caribbean islands was the main goal of the CDBC.
Perfect. Thanks also to you, Evgeni. So if I may briefly summarize the stance of your or the status of your CBDC projects, please, or digital currency projects, please correct me if I'm wrong, but would basically be for Simon working together with Eastern Caribbean Central Bank on DCash, that you basically kind of have issued a prototype and are intend to launch with a full-scale CBDC project just I think you said the next quarter, but like very, very soon. Okay, perfect. So, and then Peter with the SOF in the Marshall Islands, basically being from a technological perspective almost ready, but having like some political fights to fight, maybe to say so, with respect to the new election and the new government. And then Evgeni working on the sand dollar, which is basically like a CBDC, which is like is launched and is available and is live.
Correct. It's launched. We've recently worked with the government as well to add capabilities to for various government services to be paid online and automate those services. We, as a forum at MTech, we've also used built a CDBC offering that we're working with a number of African countries to potentially deploy that in a sandbox environment. And that's another great whole continent that is actively looking for a very much CDBC solutions that will enable, again, remittances, inclusion, financial services, and serious reduction in transaction processing costs.
Okay, perfect. Thanks for clarifying. Very interesting. So if I also first to get the discussion going, I would focus a little bit more on the main motives. So what you basically did in your introduction, you really mentioned why you're working on the CBDC, what like the initial goals are, and If I remember correctly, there is, of course, financial inclusion being very relevant to basically onboard people, because it's also quite hard in your island nations basically to just get access to money or to central bank money in the form of cash. Then the second aspect, payment efficiency. So that it's really tough to pay with cash again in the islands, and it could also take some days to pay in cash. Then payment resilience. So it was basically also a lot of the cent dollar reached about, which is resilience. So it's like, for example, enabling offline payments. But I could assume that it's like the same for your other two projects, because it's really also important to have enabled payments without internet connections. Simon also mentioned the data insights. So that's from a central bank perspective, you also gain like kind of real-time insights into how the economy currently kind of functions. And the last aspect I actually have written down is like also international dimension in this respect, that you try to connect also different islands and to foster collaboration and also increase here efficiency with respect to remittances and also cross-border payments. Besides these aspects here, are there any other main motives you want to add? Maybe I also forgot, which are relevant for your digital currency projects. Question to all of you. If not, then I'm of course also quite fine, because I remembered correctly.
Actually, in the case of Bahamas, they are using the sand dollar also for increased government fee collection. Because there were no real easy way for example, boaters to pay their boating fees, or to be able to collect customs and other port fees, charter fees, and things of that nature. In the case of Bahamas, there were they had, for 20 years, they had legislation on the books that, for example, charter fees had to be collected from boaters, but there was no active way for the government to collect those fees, and no easy way. So they're using this digitalization as a very effective way to start actually collecting some of these fees that they had on the books but never collected.
Okay, very interesting. Yeah, thanks for pointing this out as well. I think, Simon, you also wanted to add something?
Yeah, I think just generally streamlining payments. I think it's probably relevant in all the territories that we're talking about. That there's just general friction within the payment system, and so I think bringing about a truly digitized, easier to access, more accessible, more cost-effective payments infrastructure. I think there's many use cases that we could try and identify, but we're not going to be able to identify all of them. And so it's really about just providing a more secure and powerful and accessible payments infrastructure, and then seeing, observing the benefits as they're produced in the economy and the free market and in a variety of payments contexts.
Great. So
that's an excellent point from Simon on the. I want to bring the point of privacy that I think will come out probably not at the moment in these particular projects, but I think we're working very hard on in our solution for to enable complete privacy of transactions, even though you're using a public blockchain. That is a very much needed. For the case to be able to preserve competition, to be able to preserve privacy of individuals, and to be able to enhance the use of the because if you have something that does not preserve the privacy of transactions, you would have a very difficult sell to people, especially given the number of breaches and number of data collection by unauthorized users that we've seen around the world.
So Evgeni, if I understood you correctly, I will also then come to you, Peter. I've seen that you also want something to add. Evgeni, so when you talk about privacy, do you basically mean like that it's not possible for like somebody who like governs the infrastructure, the database, the DLT is able to see where the transaction comes from, or like who for whom are the data basically private?
The data is private only to the two people involved in the transaction. The transaction still posts on the blockchain, but it's fully encrypted. And if for regulatory purposes, whether that's AML or reporting purposes, that transaction breaches any of the central bank rules, that transaction can be part of a report that the relevant people within the central bank get to investigate and audit. But the ability of, and I want to point out a really big data chasm that exists between big businesses and small businesses. If you're a multinational company with an IT department of thousands of people, if there's a CBDC and that's on a public blockchain, you would employ half of your staff basically data mining and analyzing that economy and drawing the right economic conclusions out of it. If you're a small shop, that one-man business, if you wish, you wouldn't have that capability. So you immediately have a lot less economic data available to you than the multinational. So I think in order to preserve the competitiveness of an economy, you need to make that a very much equal for the small business as well as the multinational.
Mm-hmm. Thank you. And Peter, you also wanted something to add.
I just
about the motives.
Just wanted to make the point that I think all of the currencies, the digital currencies that are being introduced, or that we are trying to introduce, they all must really, in order to be useful, they must interface with the existing financial system. So, and that means really, as Evgeni said, I mean, they must comply with AML, KYC provisions. And the challenge is really to make sure that for the people, when they transact, there's privacy, but beyond the privacy, if there's a suspicious transactions, there must be transactions monitoring, which obviously is very easily doable with a blockchain technology. But the key challenge is to make sure that this privacy for normal transactions is guaranteed, while when there are suspicions or suspicious transactions, you can actually get to the people in case law enforcement needs to. And I think that's a challenge that we found not very easy to really do in a satisfactory manner.
Very interesting. So it's really kind of a trade-off, and also really tough to get data privacy on the one hand, and on the other hand of being compliant with regulatory frameworks regarding KYC, AML, CFT. Yeah, so I think this is quite a hurdle to overcome. Yeah, Evgeni, wanted to add?
It is quite a hurdle, and in fact, we've been very much focused on exactly that hurdle, being able to preserve the privacy and satisfy the AML KYC. Mm-hmm. So in our latest solution, we're doing exactly that, of effectively creating a wallet that obviously is KYC'd by the authorities, and every wallet within the country would be known who it belongs to. But at the same time, the transactions are not visible to the authorities unless they have to look at the actual transactions because they triggered AML KYC. I want to bring the point there also that central banks also don't have the ability to manage and review all these transactions by individuals. So you have to really build AI to do and implement the global AML standards into that, both on domestic transactions and on incoming transactions. And Peter's point is very accurate, that you would, when you integrate it with fiat systems, it just needs to smoothly operate without any with seamless integration for the banks, for the financial players in the country.
Thank you. So we basically started already to talk about hurdles. So this is basically one kind of hurdle to overcome. So to be kind of private and also comply and integrated into current financial system. Are there maybe questions to you, Simon? I mean, you're all quite far within your projects. What were for you the most, the most basically powerful hurdles? So the most hurdles you actually have to put the most efforts in solving, basically.
Sure. Yeah. I guess these projects are not just technology projects, and BIT, thankfully, BIT is a multifaceted team. So just for some quick background, BIT was the first blockchain company in the Caribbean. We co-founded it back in 2013. We rolled out a Bitcoin exchange and mobile wallet in 2014. So we actually started from sort of more from a crypto perspective, and then as we realized, we sort of saw the way that national currencies would go in reference to the underlying technology, and that's what forced us to pivot to say, okay, we think a viable business model here, because it was extremely difficult to run a Bitcoin exchange at that time, frankly. But what we decided was that a viable business model for the technology, and certainly one of the best use cases for the underlying technology, was the digitization of national currency. And so thankfully we came from crypto and blockchain. We understood the value proposition in the technology, and then we developed a multifaceted team to be able to roll out the digital Barbados dollar and the mobile wallet and the merchant solution to sort of foster that ecosystem in Barbados. And we've had to bring some of that experience to the Eastern Caribbean Currency Union as well, just because the scope of the project is so much bigger than just technology. There's legal implications, there's there's serious go-to-market considerations that are vast, and typically central banks are not used to dealing with retail and enterprise level software rollouts. It's a big augmentation of their responsibility, and it's a change in it's somewhat a change in their institutional mandate in some senses. Maybe not institutional mandate, but at least their responsibilities. Their mandate remains the same, right? To be the monetary authority of the country and to foster economic stability, if not economic growth. So it certainly is. It adds to their responsibility, and there's organizational change considerations and so on and so forth. And then there's marketing considerations. What's the narrative around the digital currency, and how is that received by the general public? How is it received by the institutions, especially given some of the risks and opportunities that are discussed heavily through the research, and there's all kinds of articles and whatnot that discuss this as well. So I would just say, back to your question about what the biggest hurdle was, I think was the question. It was just the size of the project. These are massive projects, and I think they take multiple areas of expertise and stakeholders to execute efficiently, and to try and ensure a higher probability of success. So I would say also just typical software development and release hurdles. Anybody who has built an app and released it, that when you think you're 80% of the way there, there's still a lot of work to do. So this is it's pretty consistent, with some of those sort of traditional hurdles and challenges that you would see from trying to release any software app. And again, because central banks are risk averse, and they need to be, given the nature of the institution and the role they play in the country and internationally for that matter, they need to be risk averse. And so they can't just bring something to market and then change it up if it doesn't work. It's like they have to get it right. And so that's why, our testing phase has been extended, because we want to make sure that we're addressing every single risk component, and that we're basically ensuring that the central bank is comfortable in getting used to operating the full spectrum. And that, again, that extends well beyond software. It's all the different components that I mentioned. As far as the functionality of the software and whatnot, again, we have great expertise in that regard. So obviously, our system functions and it provides the value that we've sought to provide. I would just say the main burdens at this point are the size and scale of these projects and how multifaceted they are.
Perfect. Maybe one last question to Evgeni, because before we go to the implications for the euro area, because I think this is also something very interesting for the audience today. So Evgeni, you've basically launched the cent dollar back in 2020. I think it was October, if I'm not mistaken. And what I would be interested in, what was the reaction of the general public to the CBDC project? So is it basically, is it used a lot? So how is the adoption? Because in China, you often read from the testing that people kind of do not really know, to be very extreme, what to do with this money now. They kind of get allocated with some lotteries. How was it in the Bahamas? How is adoption of the cent dollar?
They started out with 2 islands, and those were the islands hard hit with from the hurricanes. It was a very limited case of rollout and very well controlled. So I think it was a complete success. Actually, the very first rollout was in Christmas of 2019, when the very first production-ready sand dollars were allocated to people. So it's been sort of in a trial period, and the official launch was almost a year later, and as you said, in October of 2020. And in between that, well, I think one of the big challenges, obviously, rolling systems out in the middle of a pandemic. But that plays quite well. Obviously, paper cash carries quite a bit of bacteria and viruses on it. So moving to digital certainly will address a lot of those issues. But I think there's still a lot more work to roll out to the other islands, and as I pointed out earlier, the challenge is the dollarization. How do you move to people to use Bahamas sand dollar versus just using US dollars? And I think Simon brought an excellent point that by central banks being very conservative, they really can't afford anything to blow up in their face. So the right approach is to really play in a sandbox, and for the central banks to and that's what the Central Bank of Bahamas did, and what we're seeing other central banks to do around the world is to create a testing environment in which they can play with CDBCs, they can test and see how fintechs or other participants take up this new technology, and to iron the kinks in this sandbox, as opposed to trying to get it perfect and hope that it works perfectly on day one when it's launched. And that's more of a shock and awe type of approach, if you wish. And I think that might be a good segue into the sort of European reality. I think the ECB has been working on a digital euro for at least 4, if not 5 years. And I think that might be the approach that the ECB is taking, of trying to perfect something before it pulls the curtain on it. And I think that a more iterative and more sandbox type approach would allow for a lot more input and a lot more experimentation before, and a lot more ability to gradually improve the process, as opposed to being just a lab experiment.
Perfect. Yes. So you talked about the Digital Euro project just now, which is quite good, because this was the aspect I really wanted to go for the last 50 minutes. So if I understand you correctly, Evgeni, you're basically saying that like ECB should not really kind of over-engineer and be really like address every single potential issue before like testing it, having a sandbox, for example, right?
Absolutely. I think they should be out with in the public with a sandbox, allowing people to play with it and be able to improve on it and find the various different ways people would use a digital currency. But I also think central banks are fighting another huge battle, is commercial banks really not wanting to for CBDC to potentially go through in these financially mature markets, if you wish. Okay. It's one thing for a central bank of a country that doesn't have a lot of local banks to be pushing against this, which is the case of a lot of African countries and a lot of island nations and Southeast Asian countries. But in places like US and European Union, which is the cradle of global banks, I think the pushback comes from the JP Morgans of the world, from the Deutsche Banks of the world, who obviously stand to lose significant market share with CDBC, especially retail CDBC issued by the central bank.
Yeah, Peter, you also wanted to add something. What besides that, what can the ECB learn from also your project, maybe?
Well, I was just sort of reinforcing what Evgeni said. Namely that CBDC sort of has easily attractions in countries that are underbanked, where financial inclusion is low, where people are not linked into the international financial markets. In very developed financial markets, obviously you have pushback from the established people and established institutions, but also the upside potential of a CBDC is obviously not the same. The downside risk is very significant because basically things work. And so the upside potential is not so large, and therefore, at least as perceived by a conservative organization and the financial markets around it. So I think one has to think about what is the value added really that a CBDC can bring in a very highly developed financial market.
Actually, I disagree with Peter.
Definitely, and definitely one of the things I can think of is micropayments, machine payments. And if we talk about, for example, coming out with a sandbox to try out things, that may really be an area where there's significant potential, which is currently not met.
If you allow me, Peter, to disagree, even in the developed countries of the US and Europe, you have massive swaths of people that don't use the banking system at all. In the US, you're talking about 20 million people without a bank account and another 44 million people that have a bank account but never use it. So that's 64 million people out of 330 million population and adults that do not use the banking system. And quite a few of those folks are don't even have a phone, a smartphone for that matter. So that brings an extra challenge when you talk about CBDC with a wallet. How do you give that person without a smartphone access to the digital currency if you talk about inclusion? Because that's really, and also cost is still significant even in the developed countries. For a small business or an individual to send money from US to Europe, which are the two most developed markets in the world, presumably financially, it still takes 3 business days, and it still can set you back 5%. And not to mention bit of a spreads in between the dollar and the euro. If you're somebody like Walmart or Siemens, who's sending a shipload from Europe to America or vice versa, whether you spent $100 or euro on a payment transaction, that doesn't make a difference. But if you're sending a FedEx package for 1,000 euros, and the payment for it costs $100 or euros, that's significant. That's 10% of your profitability potentially. So I think it's still expensive, even between the US and Europe, to send cross-border payments.
Yeah, Peter?
Yes, I agree that once you go outside the euro area or outside the US, then the payments costs and the hassles are significant. And I think this is why they have sort of moved up even on the G20 agenda, where they have basically asked the CPSS to come out with solutions to that. But we have to think about, when we talk about solutions, just by saying, well, it's a CBDC, that doesn't really solve it. I mean, the CBDC solves it from a wallet to a wallet, but you still need to go from fiat to the CBDC and out again, depending on which country you are talking about and what the final destination is that you want your purchasing power to be in. And then you're talking about fees that, depending on how it is designed, they may not be insignificant either. So one has to sort of see that when one designs a solution that works internationally, that it really works cost effectively and beats the other solutions that are currently out there, which are not very good. So it can't be that hard to beat, actually.
I think that's a really, really good point, Peter, and also thanks, Evgeni, for your comments there. Now, for the last few minutes, I really would kind of slightly change the focus. So, kind of coming back to an aspect, I mean, I would ask Simon what you basically think. Like, I mean, all your digital currency projects are obviously a little bit different from the ECB ones, right? So, different goals, also way more people, who would basically get access to the CBDC. But Simon, what would you think? What could the ECB learn from your project? So if you would now change your profession or would collaborate with BIT with the ECB, like what would you basically learn from your CBDC project?
Yeah, I mean, especially with Christine Lagarde's recent comments, I think it's becoming more and more obvious that the ECB will move in this direction. I've even though we got our start in the Caribbean and that's where we're largely focused right now, we still do engage with central banks worldwide and have some efforts in the making with international central banks. So and I personally have consumed a lot of the research in this space that's come out from central banks around the world. There's a great paper recently actually by the central bank, the Saudi central bank in the UAE, and so it was interesting to learn, through these reports and papers, how different regions are seeking to take advantage of the technology and the changes in policy, because that's a large part. I mean, CBDCs, seem to represent sort of two main focuses. It's the advancement and change in policy, and then the utilization of distributed ledger technology as a likely core component. So. When you think about the euro area, it does already have some very powerful financial systems in SEPA and Target 2, of course. And so I think a lot, and this is where I think I would agree with the panelists, that I think a lot of the sort of open territory or the opportunity for efficiency gains and improvements are at the cross-currency level. And so if you can, and certainly I think that the technology, like distributed ledger technology, especially via atomic swaps, can enable very, very efficient cross-currency exchange processes. You can decrease the settlement time, you can decrease the latency, you can certainly decrease the fees, and you can actually you can have sort of a smoother mechanism for the central bank to manage their own reserve currencies if they're managing them via CBDC networks. So, within the Euro system, they already do have some pretty efficient payment rails. But if you were to try and broaden it up to say, okay, how can we foster better foreign exchange? Well, that's where a new CBDC network seems to offer some potential benefits, and it may be very well worth the squeeze there. The juice may be worth the squeeze. So. I guess, that would be my main comment. Without being a full Eurosystem expert, although I have read a number of papers about CBDCs within Europe, and trying to understand their regional specifics and how both technology and the policy change could benefit them. So, but I keep coming back to the cross-border thing being a likely obvious benefit.
Yeah, if I may, there are actually a number of challenges even within Europe. First of all, not every country is in the euro area, so sending money between the eurozone and the rest of the countries in Europe, especially Eastern Europe, is extremely expensive. As expensive as sending money to the States almost. So there's still benefits of being able to reduce those costs. With the pandemic, though, and the almost 2 trillion euro package that is being rolled out to stimulate the EU economy, the ECB actually stands massively to be able to distribute that directly to businesses and to even individuals. And the CBDC offers that amazing potential of quantitative easing directly to the consumer and to the to businesses, whereas the current method of is extremely corrupt in the European Union of distributing European funds. It involves lobbying, it involves politicians giving the money to themselves, and especially in Eastern Europe, a lot of funds are effectively going straight into corruption schemes. So effectively, a CBDC can significantly reduce the corruption in Euro funds that goes on at the moment, which I would venture to say is significantly in the double digits, if you wish. And of course, Simon had an excellent point about the cross-border piece. Europe has the unique jurisdiction, no advantages of being able to manage foreign currencies, unlike the US, and by being able to offer a CBDC, it will enable its position and put the euro at the center of as a really strong competitor for global cross-border settlement, it's especially with in Africa and in Asia.
Yeah, thanks for pointing this out, Evgeni. It's a very interesting aspect. Maybe the last question to you, Peter, before wrapping up and then going into the Q&A. If you now, Peter, would basically advise the ECB on the Digital Euro project, now with your background work on the SOF, and what are basically the main insights you have learned from the SOF, which are now kind of relevant for the Digital Euro project by the ECB?
Well, I think if I sort of would get outside the technology box, I think the biggest challenge for the ECB is one of public relations, to see that actually the way they go about introducing or talking about a digital euro, that this is done in a way that actually is not seen as something imposed from above. There's Christine Lagarde who has an idea, now it's being done, but that there is a process, a discussion process within all the different countries, including the ones that are not in the Eurozone, and that this is being sort of, there's a common reflection that takes time, but I think that is important for the general acceptability and acceptance. I think people these days, they are very, let's say, maybe suspicious is too strong, but I mean, they are definitely not thinking that if an authority is saying something, that is automatically good. And so I think one needs to create the awareness of why the digital euro would be good, and that there is the consumers understand it, the small businesses understand it, the big businesses understand it, and over time, maybe it takes a year or two, there's a consensus developing of why does it make sense and how it can best be done. And I think technology these days, there's so many bright people and so many solutions. Technology is not really the biggest bottleneck, as I would see it in the Eurozone.
Perfect. So it's again about also what we like to do with events like this today. It's about education and basically getting people from different sectors, different stakeholders on the table and discuss like what potential benefits are, risks are, to kind of have like a similar ground to think about, for example, the digital euro. Okay, so maybe one wrapping up question before we go into the Q&A. Basically, I would take another round and ask any of you the same question. I would like to ask you very brief answer to very briefly, that we can go quite quickly to the Q&A. And my question, I think, is quite easy. I mean, quite brief to answer, and it is: when do we see a digital euro? So if we see what the ECB is discussing today, when would you think that that in the end, indeed, a European citizen can access a digital euro? Maybe start with you, Simon, and then go to Peter and then Evgeni.
All right, I'll keep it quick. Let's say, Q1 2023. That's my guess.
Okay, thanks. Peter, what do you think?
At the earliest 2025, but more likely closer to 2030.
Thanks.
I think it's possible that the ECB hand is forced, and you could see an ECB done even potentially this year, based on the international competitive pressures. There's also, almost a vacuum being left by the US dollar corresponding banking problems, if you wish. So the euro could potentially fill that void, and potentially CDBC can be of great service for that. We already see digital euro in the form of stable tokens, and banks are allowed to do that. And as of this week, you see the OCC now, last week actually, OCC in the US allowed American banks to issue digital dollar receipts, if you wish. So I think in the US and European markets, you'll see a lot more stable tokens before you see the CDBC developed.
Yeah. Okay. Perfect. Yeah. So thank you for your answers. Then I agree. Basically, I hope that Simon is basically right, so that it's quite early, let's say. But I fear that in the end it might more go into the direction what Peter says, so that it's maybe 25 and 26. But yeah, I think we will see it. So yeah. So what we will do now for the next 15 minutes is basically that we will kind of have a Q&A. I've already seen that there were actually lots of questions, which is of course really great. So what I will do now is I will just share my screen, because on the screen you see all the questions. If you have not asked any question yet, you have link on the left hand side the QR code you can scan, and then you can directly go to Slido and ask the question. And I also ask you to upvote the question. So now we have like 15 minutes left, and we will basically answer the questions with the most likes. So really, I really hope that you guys are very interactive. And that what I haven't said in the beginning, that was really my fault, is that you should also mention like to whom the question basically is addressed. Yeah, so this was my fault, but yeah, I think we can just allocate it like within ourselves or within yourselves if a name is not really provided yet in the questions. Okay.
I can probably tackle the first two questions.
Yes. Okay. Then perfect. Then let's start with you, Evgeni, and then we hand over to another expert. Thanks.
Yeah, I think the pandemic is certainly tailwind for the CDBC, and you would see that also propel. But I think quantitative easing would be a bigger tailwind for CDBCs. In terms of being able to handle offline payments, I think offline payments can happen in real time. There's cryptography solutions that enable any two people to basically handle the transactions between them in real time, and then potentially post the transaction to the blockchain later on when they have connectivity. So that doesn't slow down the process any single bit.
Perfect. Thank you. I think the first question is kind of good for Peter. And in this question, what do you think? Do you think it's an issue if it's an issue to use countries of the global south as sandbox projects? What will happen to the countries if the projects fail?
Well, I think that is one of the reasons why we have been working with the Marshall Islands, because to put sort of all the eggs in one basket, and you need to be very careful that if the project fails, and the project may fail, that there are alternatives and you don't risk the country or the country's economy. And one of the attractions for us to work with the Marshall Islands is that there is a very, not brilliant, but an existing fallback, a natural fallback in the sense of the US dollar. So if the soft project were to fail quite concretely for one reason or another, then the country isn't worse off than it was before. Maybe some reputational damage, but basically it can fall back on the existing US dollar-based infrastructure. And to us, that was an important, and to the government as well, that was an important point where the government thought, actually, we can do that. We should take that risk because we have the upside potential and the downside risk is very small.
Mm-hmm. Thanks, Peter. And I think this is also one aspect why industrialized countries really are not on the forefront, because they kind of really get this right, also how Powell said it from the Fed. Great. So the next one is basically open for everybody. So whoever wants to answer it, how is the CBDC integrated into the payment infrastructure? Are the CBDCs compatible with SWIFT Target or SEPA systems, or is there a plan?
I don't mind jumping on that. I think it's more of a, like the answer is more so if these payment systems, like if a CBDC is going to be successful, of course it will need to be interoperable. It will need to integrate. It can't be a standalone system. And so the design standards are now being defined by a number of bodies. You can imagine sort of the usual suspects. The ISO, the ITU are on it with Stanford University. We work with them actually, and there's some other agencies as well that are developing standards. And so, if CBDCs are built to, for example, adhere to ISO 20022, well, then that's actually a good start for being able to integrate into international financial systems or payment systems that also meet the standard. But I would just say, yes, CBDC, the more existing payment networks that CBDCs can interoperate with and integrate with, the more likely or the more it will increase their probability of success.
Thank you very much. The next one is about currency manipulation. So with these small countries having tiny regulatory authorities, could massive currency manipulation a la Tether Bitcoin be easier with CBDCs? Maybe Evgeni to you, if you don't mind.
Yeah, I'll take that. No, I don't think the CBDC is a facilitator or enabler of this. A lot of these small countries actually already have turned their currencies into non-convertible currencies to avoid such manipulations, and they have very stringent capital controls in place and so forth. So the CBDC merely replicates that. That's also the case in the Bahamas as well. But what the CBDC could be actually a very effective way of seeing if there's manipulation, because obviously you have the ledger and you see all the transactions that are happening. So you could there's no place to hide the manipulation or the potential bad actors in a currency.
Yeah, and it also implies what the reference that the person who asked the question made was to Bitcoin, and so it's like, what asset is being manipulated, or do you expect foreign exchange traders to somehow collect a large amount of one CBDC and trying to attack on another, which already happens in foreign exchange markets anyway. So it's not, it's nothing new. If anything, it would be worse based on what Evgeni said, because traceability is more likely. Also, if you're reading into the Tether FUD, I would suggest you look for the flip side of that argument. Just my 2 cents. Oh
yeah, the Tether thing is a very interesting, and strongly encourage to people to peel the onion a few layers.
Yeah, absolutely.
There's a lot of banks that are effectively stroking that fire.
Yeah, they're very upset, especially and just consider that it was only within the last 2 weeks that the OCC said that commercial banks in the States can now officially or legally process payments on public blockchain stablecoins, USD Tether, GUSD, USDC, etc. So just consider who stands to lose from Tether, Tether FUD. And FUD means fear, uncertainty, and doubt for those who haven't been in the space very long.
There's a very interesting small tangent here on the Tether, but if you look at the 850 million in funds that have been blocked, these are funds that Tether was using partner companies to hold this money, because for the longest time, whenever Tether opened up a US dollar bank account, a certain US bank would go to that regional bank and tell them to close that account, otherwise they'll be cut off from dollar correspondent banking. Okay. So Tether has always had banks global banks go behind them and close their bank accounts. So they've been playing this whack-a-mole game, which is incredible.
Yeah. Great, thanks for your responses here. I think the next one is best for Peter, if you don't mind. And it is, do you think that after a few years of successful CBDCs, this tech will increase or decrease the reliance on a single fiat, for example, US dollar as a global reserve currency?
I think it's a bit early really to say something with confidence. Personally, my belief is that digital currencies, if they are designed well for cross-country payments, that they will definitely reduce the reliance on any international currency, whether it's as reserves or as a settlement currency or as a payment currency. I think if you look at it very practically, what will happen, most of these projects are sort of small projects in small countries. They will not make a huge difference to the US dollar. But what is going to happen is that the Chinese CBDC, I think, will have a tremendous impact, because there's also the interest to really have an alternative in this payments area of the Roads and Belts initiative, to have an alternative payments area to the SWIFT mechanism. And I think within the next couple of years, we will see that the Chinese approach will be effective for international payments in this economic sphere, and also in Africa, in many of the countries where the Chinese are very active in Africa. So I think in that sense, I think there will be a significant impact. Now, how much that will be of a general nature, I think it's a bit early to say.
Mm-hmm.
I would add to that a digital euro CBDC has the single biggest power to potentially displace the dollar. And if you look at international payments at the moment, for the first time, there was a small, in 2013, there was a small blip in international payments where the euro almost became 50-50 with the dollar. But for the first time on a consistent basis over the last year, the euro has shared equally with the dollar international payments flows. So if the US dollar is to be dethroned, if you wish, the euro has the best shot at that.
Mm-hmm. Thanks, Evgeni, and thanks, Peter, for your responses here. I would say, due to looking at the time, let's do two last questions. So to the audience, please upvote the questions which are mostly relevant for yourself and also most interesting for yourself. So the next one is to Simon, and this is basically about the role of the financial sector. So what is the role of banks, and do they act as an intermediary and, for example, distribute the CBDC to the public? I think this also directly refers to your prototype and your CBDC project, Simon.
Yeah, that's exactly right. So the financial institutions will be the firms that are actually formally managing the engagements with enterprise and retail clients. So they will provide mobile wallets and merchant applications and payment solutions to the end users, and then the end users basically have the option to convert deposits or cash into CBDC. So it's going to depend on what they prefer as a payment mechanism, like the end users, of course. But yes, the intermediaries, the financial institutions will be the intermediaries, and they will be the official payment service providers, CBDC payment service providers to the general public.
Mm-hmm. Perfect. Thanks for your answer here, Simon. I think now let's have the last one. I think this is a good one for Evgeni, if you don't mind. And the question is it a viable option to separate the wallets from smartphones, e.g. as a separate device?
Absolutely. And that's actually a solution that we are in development at the moment to enable especially folks without any mobile device to be able to still use the CBDC. There are plenty of different routes that you can take. Certainly, POS terminals that accept payments can accept somebody's payment via credentials as opposed to a smartphone and a QR code, for example. So it is entirely possible to handle transactions without a smartphone in the CBDC era.
Perfect. Thank you very much. So we have lots of questions to go. So thanks to the audience for all the questions. I think if you have more questions in particular, they are really interesting for you. You can also reach out to Evgeni, Peter, and Simon via LinkedIn, for example, or Twitter, I guess. Yeah, so I really wanted to thank you three for this discussion today. It's really interesting and very great and insightful what you guys are doing with your CBDC and digital currency initiatives. So I really see tremendous progress and also lots of implications the ECB could consider and the ECB could learn also from your projects. But we also see, and this is also good to discuss, that there also remain hurdles, right? So as you also said, Evgeni, there is lots of stuff currently developed with respect to wallets or lots of different other questions to solve before basically being able to launch on a full scale. And this is really great to have learned. So I would love to have this event kind of again, maybe in 1 year. 1 year is really a lot in this space to see what happens. So we could, for example, do this. But really, thanks for being here, to answering the questions, for being part of the panels. It was really a pleasure to having you as guests, because I think there couldn't be any better guests from practice as you three guys. And also thanks, of course, to the audience for these great questions. It was really lots of questions. So thanks, and sorry that we were not able to answer all of them. Perfect. So
thank you for the opportunity to be part of it. And judging by the number of questions they left unanswered, maybe we should do it a lot sooner than a year from now.
Definitely. So from our side, no issue at all. And also for the audience, again, if you want to see what we are doing next with our meetup, just follow our YouTube channel or follow up on Facebook, Instagram, or also write us an email, because we are again working on a great program, and we will definitely 100% address CBDCs also in the future. And I really love the idea of having this discussion again. It doesn't have to be 1 year, it can also be when the next news arise from all your projects. So lots of news to expect, I guess, and then we can do this again. So yeah, thanks Simon, thanks Peter, thanks Evgeni for being with us today. And yeah, thank you very much. And I hope you enjoy the rest of the evening.
Yeah,
thank you.
Thanks for organizing it.
You're welcome. It was my pleasure.
Thank you. Take care.
Yeah,
Bye-bye.
Bye.